SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Make a quick short video, really. There's not a great deal to say. We were looking at Bitcoin yesterday in the 1 hourly chart, weren't we, where we said there's likely to be a pump. There was a pump signal on the itchy cloud and there certainly was a pump on the chart. We got a nice pump up, that's fine. It's giving it all back though, basically back down to square one. So I guess that's what all we were looking for was a pump, but no follow through, no continuation from that pump. And if we look at these other time frames, they're pretty much not giving anything back either. So on the short term over this weekend, anything is possible. There's not any clue. We're basically wiggling around all over the place, whether you call this accumulation or redistribution for either a breakout and a move up throughout the month of October, which is definitely possible, or an immediate breakdown to new lows again, which is absolutely almost guaranteed to happen over a longer period of time. We do have a bit of bullish divergence taking place over here on the 4 hourly. It's not much to write home about. Most crypto looks like this as well. Very weak divergence. You shouldn't really expect much to happen from something like this, although it is present on the chart. And again, the higher term time frames aren't really showing anything either. Just again, divergence playing out, but really not enough to expect something to happen from below most moving averages at this current moment in time for Bitcoin. The most important thing is to get above 19,750, I'd call it, and start closing above there. That should allow for continuation up. Now, I'm not here to dissect these shorter term time frame charts today. I'm going to show you the larger picture, which is something like the S&P and the total market cap of Bitcoin, which are both floating around the same kind of area. So your 200 weekly. So it's trading 101. If you want to know if there's going to be any kind of movement on a chart, you basically look at the 200 weekly. Are we above it? Okay, we are above it. We're on it, but we are above it. So we should still expect maybe a reaction and some upside from it while being above it. If we're below it, you shouldn't really expect too much from it at all. It's almost like the super Bollinger Band center, really. So as we can see, S&P is literally on it right now, and if we were to get a reaction from it, yeah, we start to move up again. Many moving averages, as you can see, they're all going to be facing down, offering major resistance on the weekly. So we're not looking for like anything major to take place over here, but we are maybe speculating to the last bounce before the crash. The same thing we've been talking about for the last week or so. We're not going to bother looking at the Forex charts. We've seen that so far. That's so far so good. It's kind of playing out. There's euro and pound both bouncing from that support area that we put out there, and the Dixie being brought down as a result of that. That's fine, but we've not really had much reaction at all. I know Bitcoin, if we were to look at Bitcoin on its own, technically at this very moment in time, this weekly candle is green. It's not much to write home about, but it is a green candle, which is fine. But again, it's a pretty pathetic looking candle at that. You're not going to see that with anything else. Stocks had a really bad week, and we'll see where they go. They're going to continue to have bad weeks, I imagine, as we move into earnings. It'd be very unlikely to expect anybody to have positive earnings given the year that they've had. It's probably only going to get worse. But from a TA perspective, this is the last chance for a bounce. Again, we're looking at this on a weekly, so let's just have a look at the S&P on a weekly. So this is your March COVID crash. That's fine. We can accept that things can get particularly nasty. But prior to that, we reached a peak here, came down 200 weekly, bounced from it, fine. And more or less sort of scraped it here, or the 200 exponential, bounced from it, fine. Recognize this has all been a very big bull market. A nice big top here, came down, accumulated around it, continued up. Fine. Now this is your financial meltdown of 2008. We reached ourselves a peak, came down, had a reaction, broke down from it, crash, and then used as resistance on the way back up. And a similar kind of thing happened around here. Not so much on the on the S&P, but the Nasdaq has a much clearer look to it. And again, just backtesting it over and over and over again, you can see that no matter how steep or dramatic the pullback, the reaction is pretty clear. There's only been a few exceptions to the rule, and that's the most important thing to take away from this. There has been exceptions to the rule. The most obvious one of recent was the COVID crash, and prior to that was the 2001 bubble pop. Didn't really get much of a grip on that 200 exponential. Both of those were scenarios which involved enormous amounts of liquidation and black swan to an extent in this case, but for bubble pop it was like it was coming off the back of a parabolic move, isn't it? Really, an absolutely crazy parabolic move. Now this is similar to a parabolic move, so you could put both this scenario and the bubble pop into the equation when we're speculating as to how we're going to react here. So it's not the moving average to to bet your life savings on, given the environment that's going on right now. We've come right down to test it, fine, but if we break down from it like we have in the past, it's just pretty savage and severe. So we shouldn't really expect it to hold like it has held in a bull market. This isn't a bull market right now, so we shouldn't expect to see like this shouldn't be the bottom, basically, as it's normally seen as. We normally see good reactions from it, continuation from it. This is unlikely. We shouldn't view it with that kind of perspective, although maybe a little bit of capital can go into here. You can deploy some capital into here with that expectation, although you have to cross your fingers and hope for the best as well. So, with that in mind, that's the S&P. This is your total market cap, excluding Bitcoin and Ethereum. Not yet revisited it. This is one of the places I'd like to see get tested for the crypto market. So I can start to buy all these altcoins that I hold so dearly to my heart for a long period of time. Buy, hold, stake type things. They're not quite there yet. This is your total market cap, including Bitcoin and Ethereum. And lo and behold, your 200 weekly is being scraped. For the most part, reactions on it these last couple of weeks. Closures technically below it, resistance and closures below it. So again, it's what's known as squeaky bum time in the market. But if we go back in time a little bit further to the end of the last bear market, you'd look at this area and go, yeah, we did have a few closures below it. We did have some reactions from it. We did have some closures, and then bull market began. If we were just focusing on this chart, blissfully unaware of all the other things that are going on in the world, you might look at this and go, hell yeah, oh yes. Definitely be picking up around here. Definitely, the rhythm of this chart speaks to me, and that's fine. And this is what I'm saying. TA has a very good edge to it. It really does. That's how I make my money. That's my bread and butter. This is why I'm able to just sit here casually over the week, make these videos and click buttons for a living. But we'd also have to respect that sometimes TA is just one part of the picture, which it is. I got out of Bitcoin to a large extent, less than half of the Bitcoin I owned, by the way. It's about a third of the Bitcoins that I owned. I got out when I heard about the bloody Omicron virus, and I was like, oh, here we go again. So I sold a lot around these sort of lower 50s, 52, 54, thereabouts, before we really started to break down. Because I thought, here we go. I feel what's happening here. It's going to be another COVID crash. I'm just going to book some profits, and fair play. That worked. It actually worked. We did see a sell-off in all markets because of Omicron threatening to do stuff to us again. That was a trade that was taken outside of this chart. The chart was, it wasn't particularly good. We were still, we were coming down from a peak. But I took that position, or should I say, exited those positions, based on things going on outside of the chart. So there are things going on outside of all these charts, isn't there, right now? There's numerous. I refer to them less like black swans, but more like preying vultures, floating around all these charts. There's a number of reasons why we should expect further downside, despite coming to these major areas of support where previously we've accumulated from and bounced from. But if we spend our life sort of dissecting which vulture is going to peck us next, we might never make a trade. So again, looking at the Forex market last week, expecting this last bounce before the dip, the Forex market has actually behaved in exactly how we were talking last week, which is sort of pound and euro bouncing from those supports and Dixie being brought down ever so slightly as a result. Markets didn't really respond particularly well, but it has cleared a little bit of the road for us to push forward now in the form of stocks and indexes and the total market cap reads here, which is that, all right, we're at a major area now of support. Historically, we have bounced from here, even if it was just a bounce before we crashed. Or maybe this is the absolute bottom, who the hell even knows. But now we can put the Forex thing aside for a bit, and we can say, right, this is the last thing that we need to see, and then this is where we start to bounce from next week. Again, September's over the way. September's been a bearish month historically for stocks and crypto and everything anyway, for the most part. October might see some upside now, but even if it is just a little bit of upside, recognize the risk to reward is not great here. You know, I would talk about the last bounce before a crash, or the other thing that could happen is that we just sail straight through below these 200 weeklies and just go straight into a crash. Both scenarios are, you know, there is a crash involved, or at least further downside involved. So just recognize that, you know, if you are looking to make a position here, recognize that you're looking to make a scalpy position, if anything else, before it goes down even further, because the things outside of the chart, to me, do very much feel as though they're going to bring the charts down even more. With or without this 200 weekly being a real thing, like I say, you can back test it. It seems to be fine. It is trading 101 really. So there, the chances of us having a bounce here are reasonably good. But there's just so much outside of the chart that's telling us, you know, not to get too clever and not to overexpose or whatever. So, like I say, risk to reward isn't great, but next week I think we start to see things come to a head, and we start to see some movement in one direction or the other. My preference is still to the up, but it's not going to be crazy. And if it is crazy, then fine. But I wouldn't suggest you risk more than 20% of whatever it is that you normally trade with, because whether we crash straight away or we bounce before we crash, lower prices, in my opinion, are almost guaranteed. Right, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.